Welcome to the end of day review for Tuesday, the 2nd of January 2024. Starting off with the economic calendar, as you can see, there were no red folder news events, and thus there was nothing to consider in terms of any impacts on our trading for the day. Jumping straight into the charts, starting with the 4-hour, as you can see, we still have that confirmed bullish market structure. In the beginning of the day, which was roughly around this time, we were essentially reacting to the pro-trend extreme. As you can see, price was effectively mitigating itself all the way up to this pro-trend POI level. While this POI is not exactly precise, it's it should be good enough because of this level. To be honest, it's quite judgmental, but I'll mark out this level quickly so we can just have a look at it. So what you can see is we've got this up down movement, so up down up, and then we effectively just continue. So perhaps my marking is not that accurate, and we can essentially say that the pro-trend extreme is actually this level, with this being liquidity in the leg. I'll show you now what I mean. Let me just correct these drawings. Okay, so that's that, and then what I mean by liquidity in the leg is that this would be liquidity in the leg just because, as you can see, each wick is higher than the previous one as we move upwards. So this is the actual POI level, and then obviously what we can see is if we mark out the substructure, we do have a validated pullback phase when this chalk OB is body broken. So we've got that pullback phase, and then we have the last point of supply that may hold from the pullback phase to consider shorting. So overall, our bias for the day was either to continue with the longs or the shorts, essentially meaning we could trade both directions. There wasn't any news to deter us from trading any particular direction. And in terms of the daily, starting off the day, we didn't have any daily consecutive candles to suggest trading one direction or the other, because at the time Tuesday would have been the third bearish candle, or the third bearish candle, and in that case, that's perfectly fine. So there's no bias from that sense, which essentially leads to the conclusion that we can trade both directions. Then jumping onto the 15-minute, what we can see is we reacted to this 4H OB. We then created the primary leg when this level was wicked on the 15-minute. Obviously on the 5-minute there's more going on here, but for the purposes of understanding what happened on Tuesday, we can validate that primary leg, and then what you can then see is that we can validate a secondary leg when this OB fails, because there's a body break of that level right there. So we've got the secondary leg validated, and then what we can see is we react to this unmitigated primary leg from the pro-trend phase, which then validates the pro-trend secondary leg. So perhaps I should just mark this out so that we don't get confused. So this is the secondary leg from the pullback phase, and this is the secondary leg from the pro-trend phase. Once this secondary leg is validated, essentially there's no reason to trade any other direction but longs, at least not until we take out or we reset the secondary leg or extend it. So for that reason, essentially we waited for Frankfurt to open. Frankfurt broke that high, and I don't believe there was any reason to trade prior to this. So what we will do is, there's your Frankfurt high. As you can see, we didn't retrace significantly. Remember, we created a new leg this morning, which then validates why we're anchoring our fib to this particular leg. And then what we want, like I always say, if we're trading during London, we want to factor in previous session range liquidity, which I'll mark out right here. So that's Frankfurt liquidity, As you can see, it provides a liquidity in the leg, so we enter at that level, covering the low of the day, and unfortunately that was a loss, and we essentially plummeted downwards. However, there wasn't any opportunity to actually long any more, and there isn't even opportunity to short, and I'll explain why that's the case. So in terms of longs, we can't trade longs because everything to the left is effectively mitigated, and the reason why we can't trade maybe based on a 5, 15, or 30 minute unmitigated level is because in order to develop a pro trend primary leg, we do require a 4H OB to back that, or to have a chalk OB on the 4 hours. So in this level, for that to be validated, and then we've got that primary leg. So that invalidates any longs. And then in terms of shorts, because we have reacted to the pro trend extreme, we have to effectively consider that we need 4H backing for any trades, and then we have to consider IRL within this leg, and our targets can't be beyond this point. So this would effectively be our target. And as you can see, with price being all the way down here, there's no IRL in the leg because we can't use what's to the left. We have to build it by reacting to a new 4H OB. So this 4H OB becomes used in a sense when this level is broken, and now we need a new 4H level to then fuel well, one is to create IRL and then obviously fuel a new secondary leg, and then from that point onwards we can actually short. So yeah, there wasn't really an indication for why we should short. Everything kind of pointed um, to longs in terms of the technical analysis and understanding the legs. Like I said, there wasn't reason for validating another secondary. Well, we can't validate a tertiary leg in any sense. So in that case, this was a valid loss for the day. And yeah, that concludes my end of day review, and we'll do another end of day review for the 3rd of Jan.